Hello everybody. This is Stephen Choi. Welcome to Trading with Livevol. This is where I trade my own Reg T account, and I use LVX to trade, and you guys can see how I use the software. So let's go to my account. Let's see. Okay, looks like I'm up a little bit today, maybe $1,000. So I've been doing okay. Recently, most of it is from Hillshire and AZN. Let me kind of go over some of those. So in AZN, basically my premise is, if you guys been hearing the video blog, that I think the fair value is more like $75. I think there's about maybe little bit over like maybe 35–40% chance that they're gonna go with a deal, and I see these guys trading these where they sold this straddle for 130 today, right? So I'm gonna try to piggyback, try to sell some here, and then you can see more. Mostly are selling. People are selling these options, and then they're buying the later on month options. So selling the front month, buying the back month, and kind of like figuring out how to pay for it. For me, my risk chart right now looks like this, right? So it's kind of like I'm just long stock almost, but I'm trying to figure out maybe I'm kind of waiting for it to go up to 75 or go down. So if it went down, I was going to buy some calls, and then in October and sell some other calls against it. If it went up, maybe I'll start selling some straddles. So it's gone up, so I'm going to try to sell these straddles. So I'm trying to sell these straddles that basically expired this week. But in the end, I think it's okay to stay long in AZN, just because they have a natural buyer and somebody already bid $95 or $92.50 for them, and most likely the deal price might be between 92 and 100 or something, right, going forward, if they do a deal. So that's that. Let me go to Hillshire. So basically in Hillshire, I made slight adjustments. Let me show you my risk chart. So basically what I did was should do 50. Yeah, so what I'm trying to do is it's too big. So what I wanted to do was, I was thinking maybe the lowest it would go is around, like $45. So I wanted to make sure I'm up there, and then I have this side if there's another bid going up in Hillshire. So basically, I have mostly bull call spreads on, except I'm long D's, 20 of them, and then I'm trying to sell these, the July 57s or the June 55 calls against it, and I have those in right now at a 110 and then 85 cents for these. So I'm actually thinking maybe I'll modify these. So I'm gonna modify it. I put it at so I'm gonna modify it to $1. Okay. All right, so that's kind of what I have. I'm expecting them to make another bid, at least one more bid. I think eventually the price will be between 50 and 55 is my thinking, but just because of the way the stock is moving, since I'm already trading 360 above it, I'm thinking maybe there's a small chance it might be actually greater, and I think maybe the price might be between 55 and 60. So I might have to readjust it. I'm kind of thinking I'm gonna that the final deal price will be between 55 and $60. And basically, what I'm trying to do here, if you guys can see, I just kind of try to find a spot where I don't think it's gonna happen. Now, unfortunately, you know, this could happen to me right here where it trades 50 bucks. I'm thinking more like right here, 49, 43. So I'll lose like 3 grand if that were to happen. But I'm hoping there's one more or two more bids and that'll eliminate this possibility, right? So if basically Pilgrims comes back and says they're not going to bid any higher, basically I'm going to lose about 3 grand. But if they do bid higher, basically the stock's going to trade probably around maybe between this price and 55, and then this will be kind of eliminated, and then I can try to move it up again. But that's kind of what I have in Hillshire. So we'll see what happens. As you guys know, I like looking at this trade right here, the trade, this watch list trades with all the 1,000 lots, right? So basically I saw this go up, which is, it's kind of it's a utility stock. Let me actually show you what the fundamentals are. So it's an electrical utility, and basically they've been on a tear for a while. And a while back, this guy did this put spread, and now I'm the ones I was short expired worthless, and now I have these. And I saw this block of trade where they're buying these for this call spread for 30 cents. So let's see. I think what I'm going to do is I like that spread, so I'm going to try to piggyback that spread. So the reason I like it is, so I looked at this chart. It's made pretty much a all-time high, maybe. Yeah, so it's been since 2011, basically. It hasn't been higher. So maybe it has a chance of retracing back down. So I'm willing to bet small on it. I was thinking, since that guy paid 30, I was going to do 25, and I'll do it 10 times. All right, so that's my order there, and we'll see what comes of the EXC. There's also another trade that went up that was pretty interesting to me. That's in Gilead. And basically, people are buying the June 85.80 puts. Notice it's at the bottom 5 percentile on the IV30. So if you look at the IV30, I'm going to actually get rid of this. It's very low over the past year. Right? It's pretty much the lowest it's been, and it's been wedging for a while. So those two factors, plus the fact that this guy bought this strangle, made me put in this bid for Gilead, and then I got filled, right? So I paid, what did I pay? I paid 168 for this spread, and if you look at the stats, he paid 181. So it's 181. I'm just buying it for a better price, and I'm going to see how this works out. Now, you see these large open interest in both of them, so it's not necessarily definite that he was opening, but I took a shot just because it was pretty much at a 52-week low vol. The stock was wedging, and then the order flow was saying that maybe the wedging time period is going to be over. So I invested basically 500 bucks on this trade, and if Gilead really moves, maybe I can triple my money. All right. So TLT, so it's down quite a bit. So I did okay last week selling calls when I thought TLT was kind of hitting the top, right? And I was selling the weeklies. Let me go to the, and it's worked out pretty well, but now it's at the bottom range, so I'm thinking maybe I should sell a put or something. This is, if you want to buy a call, this is like the direct opposite of TLT. But you know, I think maybe I'll wait until end of today to maybe sell. So you see how it's kind of just been bouncing off these two, so it makes sense to sell a put, but maybe it might bounce, right? Also, it's only Monday, so last time I did it on Wednesday, so I might actually wait closer to the day, so I only have the risk on for a few days. So that's kind of what I'm thinking on that part. Also, there have been some put buying in XLF, so I noticed some put buying, but the one that I like best is this one right here, the June 06, June 13, 22 put spread, and the guy paid 6 cents. So let me see the stats. All right, so see right here, he bought this for 6, but also people are buying the August 22 put spread, March 18 puts. So there's some heavy put buying in the XLF. Not sure why, but the part I like was this one right here, where you only pay 6 cents and you hold it for a week, and hopefully XLF goes down to $22 by this Friday, right? So that's kind of what you're planning on if you did that trade, but we'll see if that really happens. Now, I have this trade in for 5 cents, so I might or might not get filled. I'll put up $250, and you know, maybe if it goes down, I could possibly triple or quadruple my initial investment. So that's kind of what I'm thinking. Okay, what's left? I decided to add the earnings. So Krispy Kreme has earnings today. Basically, it's implying a 9.1% move. It's a moved average of 14.5%. The last 4 earnings. It's at the 71 percentile. The trade has been kind of mixed, maybe a little bit to the bullish side, but I wouldn't say it's enough to kind of make any bet. If you bought straddles in the last 4 times, you would have made money, lost money. So pretty good chance that you probably make some cash, at least if you believe history will repeat itself. And so it's implying a 9.1% move, but it's moved an average of 14.5% the last 4 earnings. The other one is Quicksilver. So Quicksilver is implying a 12.3% move, and it's moved an average of 12.6%. If you look at it, most of the action has been in the June 6 puts. You know, looks like they're buying is what I'm thinking. It looks pretty good. I wouldn't mind doing this trade either, but I was thinking of maybe doing a 1x2, right? So I want to buy 1 and sell 2, and I might be willing to pay 25 cents, and I'll do it. Let's do it 20 by 40 times, right? So I'm going to send the order in. So basically what I'm trying to do is I'm trying to buy, let's let's see, 20. That's no, I'm gonna do it 10 because I'll risk 250 bucks the most if I'm wrong. Okay, so I'll see if I get filled. But basically, I don't think it's gonna go below $4. So what I'm doing is I'm buying the 6-5 put spread for as cheap as possible, and instead of doing a 1 lot spread, which will cost me around 40 cents, I'm doing a 1x2, so it'll only cost me 25. But I'll see if I actually get filled on it. So that's about it. If you guys want to try Livevol X, go to livevol.com. Let me actually type it down. And click on Livevol X, and then you can kind of read the Barron's article, and also you can get a free trial. But other than that, I hope your trading goes well. And I won't talk to you guys tomorrow, but I'll be back on Wednesday. Tomorrow, John is going to do a video blog, and then I'll be back the following day. I hope your trading goes well, and I'll talk to you guys on Wednesday.